Hi, Salam Alaikum, good morning and adab. Welcome to another edition of Markets and More with me, your host, Madhur Tipnis. I hope you've all had a great weekend. My weather predictions from last week were obviously incorrect. So please continue to brave the heat and don't touch the sunscreen. We'll jump right into it. To recap this week, in the US, the equity markets have dipped on Friday as the investors remain cautious due to the resurgent COVID virus. A Federal Reserve meeting next week and a historical tendency for September to be a weak month for the equities. The Dow Jones has lost about 166.44 points, dragged down by a nearly 2.9% drop. And S&P 500 shed 0.9% and Nasdaq has lost 0.9%. Moving to currencies, let's see how the exchange rates are stacking up given the news for the dollar above. The Euro AED pair is closed lower at 4.306 with a strong dollar, and the pair has been trading in the range of 4.304 and 4.348 last week. The outlook is going to be on the screen, so take a look at the indicative rates over there. For the British pound and the AED pair, it has fallen due to the strong dollar. The pair has slipped below 5.19 level and has traded in the range of 5.022 and 5.105 during the week. Moving on to Indian rupee. The AED-INR couplet has traded in the range of 19.97 and 20.07 range last week. We see the pair to be trading in the range of 20.01 and 20.12 over the coming week. I'm sure a lot of you have noticed that the Google currency glitch that happened last week and which showed the rupee peaking beyond 24 against the dirham, sending hundreds of people rushing to the branch. Pretty much had a mutiny on our hands, having to explain to people that it was a glitch in the matrix, if you will. You take a look at the outlook for the INR trade over the coming week on the screen. Pakistan, the dirham and the Pakistani rupee pair has closed in at 45.603 and has traded in the range of 45.52 and 46.10 during the week. What we are expecting is that the Pakistani rupee might trade in a depreciation basis over the next week as well. You can take a look at the rates, the projected rates on the screen for the coming week. Philippines. The Philippine peso has traded in a very limited range during the week with not a lot of variation, and the indicative rates locking in at about 13.63 to the dirham. Sri Lanka also has traded with limited volatility, stabilizing about 54.45 to a dirham. So everyone planning to send money home, take a look at the indicative rates that we have been flashing throughout. Moving forward, so coming to the global stock market update. The stock market around the globe has remained cautious about the recent developments in China, as the Chinese stocks with market capitalization at $3.2 trillion seems to be at risk of a regulatory crackdown. In the US, the equity markets have dipped on Friday as investors remain cautious due to a resurgent COVID virus, much like I talked about earlier. So we'll move past to the Indian stock exchange. The Indian BSE has touched a high of 59,737.32 and a low of 59,091.73 as Nifty moves back into the range of 17,587 points to the range of 17,792.95. What's to be noted is that India is now the world's sixth largest stock market, overtaking France for the first time in market capitalization. Both Sensex and Nifty have advanced 23% and 25% respectively year to date, while foreign and domestic investors bought stocks worth $8 billion and 23,532 crore in values of Indian rupee. Moving on to the commodities update. The oil prices fell on Friday as energy companies in the US Gulf of Mexico restarted production after back-to-back hurricanes in the region shut output. I'm actually really glad that they shut output so that we were able to avoid an impungent disaster about 10 years ago when there was a leak. Having said that, oil is currently trading at $72 per barrel, and oil prices are actually have posted a 3% weekly gain. With that said, that's a wrap for this week. Have a great weekend ahead and continue to stay positive and test negative. In the meantime, masalama, goodbye, and take care of yourself. Bye bye.